Welcome to the Booze Compass Monthly Briefing for July 2026. Executive Summary: July 2026 revealed an alcohol beverage industry navigating profound structural pressures through contrasting strategies of consolidation, divestiture, and operational retrenchment. Major producers faced a critical inflection point as declining consumption volumes, particularly among baby boomers, collided with oversupplied whiskey inventories and weakening premium category momentum. Distribution networks underwent dramatic reshaping amid bankruptcy proceedings and asset sales, while ready-to-drink cocktails emerged as the primary growth vehicle, offsetting declines in traditional beer and wine segments. The month's activity signals an industry moving from growth-driven expansion to survival-focused rationalization, with market leaders shedding non-core assets even as distressed operators sought buyers or protection. The strategic landscape bifurcated sharply between companies pursuing aggressive premiumization and innovation in spirits, and RTDs versus those managing mature portfolios through cost reduction and capacity adjustment. Failed mega-merger discussions among top-tier producers underscored the challenges of achieving transformative scale in a contracting market, while smaller craft operators faced existential threats from over-leveraged barrel inventories and collapsing valuations. Geographic expansion patterns shifted decisively toward emerging Asian, African, and Latin American markets as U.S. volume growth stalled across most categories. This combination of defensive consolidation, strategic portfolio pruning, and cautious international expansion defined an industry recalibrating expectations from perpetual growth to sustainable profitability in a fundamentally changed consumption environment. Category analysis: mergers and acquisitions. Distribution consolidation dominated July's M&A landscape, led by Southern Glazer's wine and spirits agreement to acquire substantially all assets of Clare Rose Inc., a leading Long Island distributor, strengthening SGWS's position in the critical New York market. Columbia Distributing completed its acquisition of Republic National Distributing Company's wine and spirits distribution rights in Oregon and Washington, absorbing approximately 350,000 cases of spirits and 500,000 cases of wine. The transaction resulted in RNDC planning layoffs of more than 400 workers across the two states as it closed several facilities. Quality Brands officially closed its RNDC Plain States deal, expanding distribution across Nebraska, North Dakota, and South Dakota while integrating 160 employees. These distribution moves reflected broader industry rationalization as wholesalers consolidated to maintain efficiency amid declining volumes. The month's highest-profile M&A activity centered on failed or rejected transactions that revealed deepening valuation gaps and strategic misalignment. Brown-Forman's board rejected an unsolicited $15 billion acquisition proposal from Sazerac, determining the offer was not actionable and inconsistent with the company's vision for its future. The Jack Daniel's maker later rebuffed a renewed approach as Sazerac took its bid directly to shareholders, though Brown-Forman reaffirmed its commitment to remaining independent. Separately, merger talks between Pernod Ricard and Brown-Forman collapsed after the companies were unable to reach mutually acceptable terms, providing relief to Diageo's new CEO Dave Lewis by removing the threat of a newly enlarged competitor. These failed combinations underscored the challenges of executing transformative deals in an uncertain market environment where family-controlled companies prioritize independence over consolidation premiums. Portfolio rationalization drove several notable transactions as major producers divested non-core brands. Dublin-based Cobblestone Brands agreed to purchase Biscuit and Dubuché Cognac and Cabo Wabo Tequila from Campari Group, expanding its spirits portfolio with established brands the Italian company no longer considered strategic. Bacardi Limited completed a transaction making it sole owner of the Teeling Whiskey Company and the Teeling Irish Whiskey brand, with founders Jack and Stephen Teeling remaining as strategic advisors. Tilray Brands reportedly began selling Atwater Brewery less than 2 years after acquiring the business from Molson Coors, with founder Mark Reith expressing optimism about craft beer's future under new ownership. In the distillery acquisition space, Swiss private equity group Spirit Capital purchased the shuttered Killarney Brewing and Distilling Company site in County Kerry, Ireland, while Sazerac's affiliated Tom Collins Distilling acquired the former Garrard County distilling property in Lancaster, Kentucky for $20 million after the distillery entered receivership. These transactions demonstrated both strategic portfolio pruning by large producers and opportunistic acquisition of distressed assets by well-capitalized buyers. Financial developments. The beverage alcohol industry confronted severe financial distress in July 2026, most dramatically illustrated by Republic National Distributing Company's Chapter 11 bankruptcy filing in Texas court after a year-long decline. Once the second-largest wine and spirits distributor in the United States, RNDC sought buyers for its remaining operations while planning to wind down residual portions of its business. The bankruptcy filing followed a series of asset sales throughout the year as the company systematically divested regional operations to Columbia Distributing, Quality Brands, and other competitors. The collapse of a major three-tier distributor sent shockwaves through supplier networks and raised questions about the sustainability of traditional wholesale models in a contracting market. Separately, Alabama Cooperage, previously known as Jack Daniel's Cooperage, announced closure in September with 71 job losses as parent company ISC aligned production with current market demand, reflecting broader barrel inventory corrections. Major publicly traded producers reported mixed financial results reflecting category-specific pressures. Brown-Forman projected fiscal 2027 organic operating income to decline 3% to 5%, with organic net sales approximately flat, citing ongoing cost pressures, changing product mix, lower used barrel sales, potential trade disputes with Canada, and broader macroeconomic uncertainties. The company planned to reduce capital expenditures while focusing on innovation and consumer route changes. Mexico's Grupo Cuervo reported a 6% decline in net sales to $564 million in the second quarter, with volume down 3.4% to 6 million cases, though management noted sequential improvement in the U.S. market. Constellation Brands lowered its fiscal 2026 comparable EPS outlook to $11.30 to $11.60 due to challenging macroeconomic conditions, revising its net sales decline expectations. Heineken released second quarter 2026 results, reporting strong revenue and profit growth, driven by increased global beer sales and strategic cost management, providing a bright spot amid broader industry challenges. The craft beer and spirits sectors experienced acute financial distress as over-leveraged operations confronted collapsing valuations. Ballast Point Brewing faced potential closure amid internal lawsuits alleging unauthorized loans totaling $3 million, creating severe operational challenges for the once prominent craft brewery. Uncle Nearest co-founders Fawn and Keith Weaver were dismissed from the company effective June 1, 2026, amid financial turmoil and ongoing federal investigations into the brand's financial issues, with litigation over company debt complicating the sale of associated properties. MGP Ingredients announced plans to temporarily halt distilling operations at its Limestone Branch Distillery in Lebanon, Kentucky, and Lux Row Distillers in Bardstown, Kentucky, effective May 1, 2026, due to an oversupplied American whiskey market. The broader whiskey barrel crisis deepened as barrels used as loan collateral depreciated sharply amid market saturation, falling consumption, and tariff pressures, triggering legal disputes, foreclosures, and forced sales across the bourbon industry. A U.S. bankruptcy judge in Michigan ordered the sale of a Danville bourbon distillery to satisfy $34.5 million in debt, with the sale potentially including real estate and more than 6,000 barrels of bourbon inventory, illustrating the sector's financial fragility. Market trends. Consumer behavior patterns in July 2026 revealed accelerating generational shifts fundamentally reshaping beverage alcohol demand. IWSR's BevTrack survey data showed Generation Z's drinking participation rate stabilizing at 74%, matching the overall adult population, while baby boomers' participation declined to 71%, as reduced boomer engagement drove deepening consumption declines in 2025. Millennials led with an 81% participation rate, followed by Generation X at 77%. But the critical finding was that boomers, historically the industry's highest consuming cohort, were moderating drinking habits at an accelerating pace. This demographic transition created both challenge and opportunity, as Gen Z drinkers showed increasing engagement but consumed different products through different channels than their predecessors. The shift was particularly pronounced in craft beer, where the Brewers Association's mid-year report estimated a 4% production volume decline in the first half of 2026, yet more than half of craft brewers reported individual growth, suggesting divergent outcomes based on relevance to younger consumers. Category performance diverged sharply as spirits strengthened market leadership, while beer and wine faced sustained pressure. NIQ. On-premise data for July 2026 showed spirits continuing to gain share in bars and restaurants, with tequila, vodka, and cordials outperforming the broader market. Ready-to-drink cocktails emerged as the industry's bright spot, with prepared cocktails delivering value growth despite a 5% volume decline, indicating successful premiumization. The World Cup provided temporary lift to beverage alcohol sales, with pre-mixed cocktails and non-alcoholic beverages experiencing double-digit percentage increases, while domestic beer saw only moderate gains, underscoring shifting consumption preferences even during major sporting events. U.S. alcohol sales declined 2.6% in early July, according to Tour data, with prepared cocktails outperforming other categories, while wine posted the weakest results, and weekly sales slumped after July 4th. The global beverage market entered what Nielsen IQ characterized as a transition phase, with changing consumption habits, declining volumes, and RTD cocktails spearheading off-premise growth despite overall market challenges. Geographic and segment-specific trends revealed pockets of opportunity amid broader decline. Tequila volume sales slowed in the United States but experienced significant growth in emerging markets across Asia, Africa, and Latin America, with the category entering what IWSR described as a new chapter after years of dynamic U.S. gains. New Zealand winery Gießen showed rapid expansion in the non-alcoholic wine segment, growing its Gießen 0% range by over 50,000 cases in the U.S. over 2 years to reach more than 130,000 cases in 2025, contributing to overall brand sales growth of 8% to 200,000 cases. The adult non-alcoholic beverage category entered the mainstream, prompting brands to reassess on-premise strategies, while hemp beverages grew 133% year-over-year between 2024 and 2025, despite looming regulatory uncertainty. Champagne showed signs of recovery in the U.S. market, though volumes remained below 2021 to 2022 peaks, and higher-proof Blanco tequila emerged as a hot spirits trend, reflecting consumer interest in more intense agave flavors. Canned cocktails crushed traditional spirits in UK off-trade sales, with a 17% increase in 2025, as shoppers embraced bar-quality drinks at home, demonstrating the RTD trend's international reach. Market analysis. Strategic analysis of July 2026 market data revealed an industry undergoing fundamental structural transformation rather than cyclical downturn. The Wine and Spirits Wholesalers of America's SipSource forecast projected continued U.S. spirit sales declines through 2027, with the core spirits category, excluding RTDs, expected to stabilize in negative territory, though vodka was projected to outpace the broader market, with depletion decreases of 3.91% by Q4 2026 and 3.68% by Q2 2027. WSWA identified agave spirits, whiskeys, and vodka as outperforming segments within an overall declining market. This forecast indicated modest improvement toward late 2026 and into 2027, but acknowledged persistent industry headwinds requiring strategic adaptation. The Pro Spirits Report 2026 characterized the spirits industry as undergoing a structural shift, with declining consumption volumes, increasing price pressure, and intensifying competition, noting that growth was now selective and occurring primarily in no/low alcohol products, RTDs, and new consumption occasions, while traditional categories faced mounting pressure. Equity market valuations reflected investor skepticism about near-term recovery prospects. Constellation Brands traded at approximately 11 times next 12-month price-to-earnings ratio, near all-time lows, despite maintaining 37 to 38% beer margin guidance and continued market share gains, as core brands Modelo and Corona faced negative depletions offsetting smaller brand growth. Analysts characterized the company as a hold, noting that sustained core brand growth was required for valuation re-rating above current levels, and identifying positive beer depletions aligned with shipments as the critical Q2 2027 key performance indicator. Molson Coors Beverage Company was rated a strong buy by some analysts, despite trading at deep discounts to peers, with operational efficiency improvements driving gross margin to 38.2% and operating income up nearly 39%, even as sales growth remained modest. The company's valuation multiples, PE of 8.35 times, EV over EBITDA of 6.54 times, and price over cash flow of 3.97 times, suggested what analysts termed excessive market pessimism, though aggressive share buybacks amid negative free cash flow and a $513.9 million cash balance drop warranted close monitoring. Market sizing and forecast data painted a picture of selective growth opportunities within overall contraction. The global canned RTD cocktails market was projected to grow from $3.3 billion in 2026 to $5.9 billion by 2030, driven by consumer demand for convenience and premiumization trends, representing a compound annual growth rate exceeding 12%. Roland Berger's Future of Alcohol 2026 Industry Outlook projected that global per capita alcohol consumption could potentially halve by 2050 across all major regions, requiring industry leaders to adapt quickly to changing consumer behaviors and market dynamics. Silicon Valley Bank's 25th Annual State of the U.S. Wine Industry Report and BMO's Wine Market Report both highlighted how higher wine spending was masking ongoing industry challenges, including demand pressure and distribution changes. The Brewers Association's mid-year data showed craft production holding steady at a 4% decline, with a slight increase in brewery closures. Those survey results indicated that over half of craft brewers reported individual growth despite category-level volume declines, suggesting successful operators were capturing share from struggling competitors in a consolidating market. Product launches. July 2026 witnessed a wave of premium aged spirit releases as distillers leveraged mature inventory to command higher prices amid volume pressures. Barton 1792 Distillery introduced two landmark expressions: 1792 Kentucky Straight Rye Whiskey, the brand's first-ever straight rye, and 1792 XV, a 15-year-old bourbon representing both the oldest in the collection and the first bottled unfiltered at cask strength. Bulleit released two significant expressions: Bulleit Rye 20 years old, the brand's oldest release to date distilled in Lawrenceburg, Indiana, and Bulleit 87, a blend of bourbon and rye whiskeys bottled at 90 proof and slated for September 2026 retail availability. Heaven Hill Distillery marked its 90th anniversary with a limited 9-year-old bottled-in-bond double mash bourbon, blending traditional and wheated mash bills, priced at $49.99 and available August 2026. Bibb & Tucker announced an 8-year-old bottled-in-bond bourbon, aged twice the federally required 4-year minimum and bottled at 100 proof, arriving nationwide in September. Old Forester added Triple Char to its 117 series, crafted entirely from whiskey distilled at the Main Street facility, while Yellowstone Bourbon released its limited edition 2026, blending 7- and 14-year-old Kentucky Straight bourbons finished separately in ruby and tawny port casks. Scotch whiskey and international spirits launches emphasized innovation in cask finishing and collaboration. The Macallan released 110 proof, part of its Sherry Oak collection bottled at 55%, to reveal added depth, enhancing the rich, fruity character of the 12-years-old expression. Rare Find, the Edinburgh-based independent bottler, launched two single-cask collections, one exploring 3 interpretations of Glenglassaugh's Coastal Highland Spirit through First Fill Foursquare Rum Barrel, First Fill Madeira Octave, and First Fill Ruby Port Octave finishes, and another showcasing 4 distinct maturation journeys, including a Blair Athol 12-year-old in First Fill X Bourbon Barrel, and a Deanston 14-year-old in First Fill Napa Valley Red Wine Barrique. Dewar's released the Champions Edition 19 years old to celebrate the U.S. Open, aged in Cabernet Franc red wine casks from New York's Volfer estate. Nikka Whiskey launched Miyagi-Kyo Single Malt 10 years old, its first age statement Miyagi-Kyo since 2015, limited to 1,572 bottles at $100.74.99. Barrel Craft Spirits announced Decade 2, a blend of whiskeys distilled annually from 1995 to 2005 and finished in Spanish brandy and Hungarian oak casks, part of the Black Label series, at $199.99. Ready-to-drink innovations and functional beverages reflected industry efforts to capture growth categories. Joel Gott Wines, a powerhouse producer of affordable wines, entered the RTD market with new releases tapping into growing RTD and functional beverage trends. Cutwater Spirits partnered with actress Parker Posey for the Longest Island campaign, promoting its ready-to-drink Long Island iced tea cocktails to redefine summer hosting. Biro launched limited edition Sony Pictures Spider-Man Brand New Day-inspired collectible cans, available online and at select theaters. Dogfish Head expanded into canned cocktails with 7 ready-to-drink beverages made with real spirits and fruit, available in 2 8-packs each containing 4 flavors. Little Sun introduced the first canned Calimoco, a wine-based RTD cocktail, expanding the wine RTD category. Owl's Brew added functional non-alcoholic mixers in 4 flavors, catering to health-conscious consumers. Goose Island Beer Company revealed its 2026 Bourbon County brand stout lineup ahead of Black Friday release, featuring new variants and collaborations. Maui Brewing Company debuted Maui Light and A, its first packaged non-alcoholic beer, while Lakefront Brewery introduced Noon Game IPA, a year-round India Pale Ale at just 3.2% ABV and 100 calories, delivering full IPA flavor without high alcohol content, addressing the moderation trend. Industry news. Leadership transitions and organizational changes marked July as companies adapted to market pressures. Annie McGuinness of Vine Street Brewing was appointed president of the National Black Brewers Association, aiming to enhance representation and support for black brewers nationwide. Glencadam Distillery welcomed Will Stafford as its new distillery manager, following the 200th anniversary celebrations and launch of a new state-of-the-art visitor center in Brecon, bringing over 14 years of Irish and Scottish spirits industry experience. 7&I Holdings appointed Mauricio Leyva as CEO of 7-Eleven Inc., effective August 1, 2026, to lead the company's next phase of growth. Lohman, a leading voice AI platform for restaurants, appointed Martin Bryant as Vice President of Revenue to lead global revenue operations and drive strategic market initiatives. Southern Glazer's Wine and Spirits announced job cuts representing 1% of its workforce as it implemented a more tech-heavy business model, reflecting the broader distribution sector's shift toward digital sales channels and artificial intelligence. Facility investments and closures reflected divergent fortunes across the industry. Horse Soldier Bourbon opened a new $200 million distillery and bourbon tourism attraction in Somerset, Kentucky, featuring a 50,000-square-foot distillery visitor center and the Outpost Retail Center, representing one of the largest single-facility investments in Kentucky's bourbon tourism infrastructure. Chuckanut Bay Distillery opened its second rooftop bar location in Bellingham, Washington, at the Portal Container Village, offering a scaled-down cocktail and small bites menu in a family-friendly setting. Stannergill Distillery commenced production of its inaugural single malt Scotch whiskey in the Speyside region. In contrast, 21st Amendment Brewery agreed to a $423,000-plus offer in compromise with the Alcohol and Tobacco Tax and Trade Bureau, resolving alleged violations of federal labeling regulations and outstanding tax issues prior to its recent revival. RNDC filed WARN Act notices for 160 layoffs in Alaska by September 4th. Adding to the more than 400 workers facing job losses in Oregon and Washington following asset sales. Industry events, competitions, and recognition programs highlighted innovation and excellence. The Glencairn Glass Crime Short Story Competition announced Kathy Schilbach as winner for Making Friends and Ross Alexander as runner-up for Life Wasted. George T. Stagg Bourbon was named Best in Show at the 2026 Ascot Awards, impressing judges with its complex profile and high alcohol content. Colorado's Branch and Barrel Distillery earned 6 medals at a prestigious spirits competition, highlighting the state's growing whiskey reputation. The Brewers Association opened self-nominations for the 2026 Board of Directors election with an August 17th deadline. The Drinks Business Green Awards 2026 opened entries ahead of a new one-day sustainability forum and award ceremony in November, including panel discussions, tastings, and a new award recognizing cooperative wine producers. Gifford launched its 2026 West Cup cocktail competition, inviting bartenders to create connected morning and evening cocktails featuring at least 30 milliliters of Gifford products, with regional heats leading to an international final in Angers, France. The Bourbon Women's Symposium was scheduled for August 13th to 16th in Louisville, featuring seminars, tastings, and networking opportunities for women in the bourbon industry. Cross-category insights. Financial distress and M&A activity converged to create a distressed asset acquisition environment unprecedented in recent industry history. The pattern of distribution bankruptcies, craft brewery closures, and whiskey distillery foreclosures created opportunities for well-capitalized buyers to acquire production capacity, brand portfolios, and aged inventory at substantial discounts. Sazerac's acquisition of the former Garrard County distilling property for $20 million and Spirit Capital's purchase of the shuttered Killarney site exemplified how financial players were positioning to benefit from the bourbon inventory crisis. The RNDC bankruptcy represented the logical endpoint of distribution margin compression trends visible in earlier asset sales, while the failed Brown-Forman/Pernod Ricard merger talks and rejected Sazerac bid demonstrated that even non-distressed industry leaders face strategic uncertainty about optimal scale and scope. Portfolio rationalization by Campari, Tilray, and others occurred simultaneously with capacity idling at MGP and cooperage closures, indicating synchronized retrenchment across the value chain from production through distribution. Product launch strategies directly reflected market trend data showing RTD growth and core spirit category pressure. The proliferation of ultra-premium aged whiskey releases, including multiple 15-plus-year expressions, bottled-in-bond offerings, and exotic cask finishes, represented producers' efforts to monetize mature inventory at higher price points as volume growth stalled. This premiumization strategy aligned with consumer data showing sustained interest in craft and premium spirits, even as total category volumes declined. Simultaneously, the wave of RTD launches from established wine producers like Joel Gott, beer companies like Dogfish Head, and spirits brands like Cutwater demonstrated industry-wide recognition that convenience-focused, lower ABV, occasion-specific products represented the primary volume growth opportunity. The functional beverage trend manifested in both alcoholic and non-alcoholic launches, with Owl's Brew's functional mixers, Maui Light A, and Lakefront's low ABV Noon Game IPA, all addressing the moderation macro trend identified in generational consumption data. These launch patterns showed producers responding to market research with portfolio diversification rather than doubling down on traditional core products. Regulatory developments and international trade policy created both headwinds and tailwinds shaping competitive dynamics. The UK-India Free Trade Agreement's reduction of Scotch whisky tariffs from 150% to 75% opened significant market access for Scottish producers precisely as domestic markets contracted, accelerating the geographic diversification imperative. Conversely, the looming regulatory ban on hemp beverages, despite 133% growth in 2024 to 2025, illustrated how policy uncertainty could strangle emerging categories before they matured. The proposed Goodness of Hemp Act represented industry stakeholders' attempt to create federal framework clarity, but the November deadline for potential restrictions created urgency that likely influenced M&A valuations in the cannabis beverage space. Trade tensions between the U.S. and Canada, mentioned in Brown-Forman's Outlook, combined with the prior Scotch whisky tariff relief to create asymmetric international competitive advantages. China's alcohol industry group call for tougher regulation of online spirit sales signaled that even high-growth emerging markets were implementing controls that could limit foreign producers' e-commerce strategies. These regulatory crosscurrents forced companies to balance domestic market defense with international expansion opportunities, visible in tequila's shift toward Asian, African, and Latin American markets as U.S. growth decelerated. The intersection of generational consumption shifts, financial distress patterns, and innovation cycles suggested the industry was experiencing not a temporary downturn, but a permanent demand structure change requiring business model transformation. The simultaneous decline in boomer participation, flat Gen Z engagement at lower consumption levels than previous generational cohorts at similar ages, and the shift from on-premise social drinking to off-premise convenience consumption fundamentally altered profitability equations across production, distribution, and retail. Winners in this environment, represented by craft brewers reporting growth despite 4% category decline, Giesen's non-alcoholic wine expansion, and successful RTD brands, shared common characteristics of channel flexibility, product innovation velocity, and alignment with moderation trends. The financial distress concentration in traditional craft beer, bourbon barrel speculation, and wholesale distribution models reflected these sectors' structural challenges adapting to the new consumption paradigm. Major producers' divestiture of non-core assets and focus on fewer, larger brands with global scale potential indicated consolidation around products capable of supporting the marketing investment and innovation cycles necessary to remain relevant to younger consumers across multiple markets and occasions.